Hey guys, it's Julie here with TipRanks, and today we're taking a look at two blue chip stocks that score a perfect 10. So let's get into it. All right, everyone, welcome back. Thank you all so much for being here. Today we're taking a look at two blue chip stocks. These are big name companies that are well known for their long term profitability and stability. And both the companies today score a 10 out of 10 on the TipRanks Smart Score. That looks at 8 unique factors and measures a stock's overall likelihood to outperform the market. So today we're going to take a look at these companies, what it is that they do, what's behind those perfect 10 ratings, as well as how those Wall Street analysts weigh in. We found today's companies using the TipRanks Smart Score tool. Found under the Ideas tab, you can head to Top Smart Score Stocks, where you'll find a list of companies that score a 10 out of 10 on the TipRanks Smart Score. You can sort by how long they've had that score for, sector, as well as market cap, and you'll have a list of companies down below. And just before we get into these two stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into our two blue chip perfect 10 stocks. First on the list today is retail giant Walmart. They trade under the ticker WMT, currently priced around $68 per share. In the last 3 months, they've climbed nearly 15%, and in the past year have gained about 30%. They currently score that 10 out of 10 on the Smart Score with a bullish blogger sentiment, positive crowd wisdom, and very bullish news sentiment. We've also seen hedge funds increase their holdings by an 11.5 million shares last quarter. Walmart is known around the globe and is the world's largest brick and mortar retailer. The company operates more than 10,500 locations in 19 countries, including over 4,600 Walmart superstores and nearly 600 Sam's Club stores. They employ over 2 million people worldwide and are the clear leader in the discount retail segment in the US. In 2024, they had revenues of $648 billion. They'll be sharing their second quarter earnings report in about a week's time on August 15th, and this does follow an earnings beat for the previous quarter back in May. For their Q2, analysts are anticipating earnings per share of 65 cents, which would be a 4-cent increase over last year. In their Q1, earnings per share of 60 cents beat by 7 cents per share, and revenue came in at $161.5 billion. That was up 6% year over year. They also saw their e-commerce grow 21% globally, led by store-fulfilled pickup and delivery and marketplace. Walmart also just recently became a dividend king. They first started paying a dividend back in 1974 and recently surpassed that 50-year mark of payments and dividend increases. Their last dividend was 21 cents per share and paid out at the end of May. The next is anticipated to be released alongside that next earnings report. Now, it does look like a decrease here, but that is also because the stock underwent a 3-for-1 stock split in the new year. Just over a week ago, we did hear from one analyst at BMO Capital who increased their price target on the Walmart stock. They said that the company's valuation can continue to move higher as it demonstrates the durability and consistency of its earnings algorithm in coming years, following nearly a decade of investments to reach this margin inflection. The stock currently has 30 analyst ratings, coming in as a strong buy with 27 buys and 3 holds. The average price target comes in at $74 per share, implying an upside potential of over 8%. Looking at some of those recent ratings down below, on the high end, we do have a price target at $86 from Tigris Financial, implying an upside of over 25%, while our low end price target is $66 from Barclays, with a downside of about 3.5%. For our second stock today, we have the company formerly known as Facebook with Meta Platforms. They trade under the ticker META, META, currently priced at $486. Their stock has climbed over 54% in the past year. In the last 3 months, up about 5%. With their 10 out of 10 Smart Score, they deal with bullish blogger sentiment and positive technicals. We have seen hedge funds decrease their holdings in the last quarter, but we have seen informative buys worth $19.6 million in the 3 months from corporate insiders at Meta. Originally creating the Facebook social media platform, the company has now expanded far beyond that. Meta Platforms is now a holding company operating a social media realm through its subsidiaries Facebook, Messenger, Instagram, and WhatsApp. They have a total user base across all of their platforms well in excess of 3 billion people. Their core business is social media, monetized through digital advertising. That business model depends on reach, and Meta Platform connects with some 40% of the world's total population, providing a solid base for profitable operations. They're also working on expanding the metaverse with different interactive products such as virtual reality, augmented reality, and smart glasses. Meta Platforms just reported their Q2 earnings last week on July 31st, where they had a solid earnings and revenue beat. For their second quarter, they reported earnings per share of $5.16, beating by over 40 cents per share, and revenue came in at $39.1 billion, which beat by $760 million. Zuckerberg said that they had a strong quarter, and Meta AI is on track to be the most used AI assistant in the world by the end of the year. Following that earnings report, we have had a bunch of Wall Street analysts weighing in on the stock, including a five-star analyst from JP Morgan who bumped up their price target. Going from $480 to $610, the analyst noted that Meta's advertising market trends remained healthy and their revenue guidance outpaces investor expectations despite facing challenging comparatives. Additionally, the company is making visible progress in its AI initiatives, which include enhancements to its core products, the development of new products like Meta AI, and the expansion of the metaverse. This suggests a forward looking strategy that's expected to drive long term growth. Their stock does have 28 current analyst ratings, coming in as a strong buy with 24 buys, 2 holds, and 2 sells. The average price target comes in just shy of $550, implying an upside of about 12.5%. But you can see here we do have a wide range of price targets. Looking at our most recent ratings down below, this one from Rosenblatt here at $643 is our high end price target with an upside of nearly 32%, a lot in those mid teens to mid 20% upsides. We have to scroll a ways back here to get to our low end, which is a sell from back in May with a downside of 26%. So there we have two strong buy blue chip stocks, both scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So make sure you always do your own research and due diligence. Thank you guys for watching. Have a great day, and I'll see you back here next time.